Good morning, everyone. Welcome to the European crossover webinar. We don't have any data that's hit right now, although we do have PMI out of UK out at the bottom of the hour, and then we have Eurozone retail sales. Do have a Bank of England rate decision. That'll be at 7 a.m. Eastern. And Challenger layoffs, jobless claims. And at 10 a.m. Eastern, we will have durable goods and factory orders. We have seen a little bit of a bounce back here in equities after that sell-off. We've come back 100 handles off of the lows. Actually, that low that came in was exactly at 161% from where the range had been a little bit earlier in the day. So it kind of played out well, but boy, I didn't expect to see that much of a bounce. But decent bounce here in the NASDAQ. We can take a look at that. Bear with me. So you can see here, pretty good little bounce back. We did see a decent little pair back, but you can see this bounce back. Take a look at this here. See if we can make it maybe as high as a 50%. We know how NASDAQ likes a 50%. See if we can come up here to this 13,465. Also, Bitcoin has had a nice pop back. Actually coming off a bit on here, but you can see here we came up to that. This is, once again, Bitcoin really trades these levels really well. You can see here right at that 38,600, we kind of paired back a bit, down about 1,000, just now off that high. If we get in two consecutive 2-hour closes above that level, that would open a door for us to make a move right back up in here, which would put us at about 41.3. And we can take a look at where we stand here. Just a quick recap on FX. Euro dollar continues to slide back a little bit. Oh, this is interesting. So we did get that follow through here. And cable also pairing back. The Aussie been very quiet. Yesterday was super quiet, just a tad bit higher. Dollar CAD, same thing, very quiet. Not sure what happened to the Kiwi. I don't see the Kiwi here. And there's a Kiwi. As mentioned, the dollar CAD. Dollar peso, just a little bit of short covering after try to stabilize there. And dollar yen, continue to move a little bit higher. We actually have our bias chart resistance today, looking for potentially a challenge up in here. We'll get to that. And then lastly, on the dollar index, oh, wow. We have our resistance coming in today at 91.49. All right, I'm coming right there, 91.49. I guess right there. I guess it's 50, 49. Actually, right there, which is actually 50. I think I have 91.49 for today. After we held here and we didn't pull back in here, and we're just right at that 91.09. Thought they might be able to push higher. Where can they go? And I just went with this wick here. That comes in at 49, if you want to call it 50, whatever the case would be. With that, we'll go and take a look at the news. So the Australian New Zealand dollars up as yield spreads widen in their favor. Australian New Zealand dollars crept up on Thursday as rising stock market spoke of positive global risk sentiment, while higher bond yields at home gave the currencies an edge up on their U.S. counterpart. The Aussie firmed to 76.42 and from a 5-week low of 76.54 touched on Tuesday. It now faces resistance. The Kiwi was at 72.12, having recovered from a 71.36 trough earlier in the week. Yields on the 10-year bonds have now shot to the highest since the market mayhem of it March at 1.41%. Yields have been on the rise since the RBNZ trimmed the amount of bonds it would buy this week and took off on Wednesday when the local jobs data proved stronger than the forecast. It leaves a picture of economic strength and shrinking capacity, said Westpac analyst Emery Spitzer. Given such fundamentals for the Kiwi, we are watching the upside break above 72.25. We retain our long-held bullish outlook, targeting 75 by April. Australian yields have hit their highest as the RBA extended its bond buying program by another 100 billion Aussie dollars. The RBA will begin buying bonds at a faster pace than the government is selling them, which has also expanded the balance sheet more quickly than the U.S. Federal Reserve. And the dollar edged higher on economic optimism. Sterling eyes Bank of England. The dollar edged towards its strongest in more than 2 months against the euro and the yen. And Thursday is pessimism about the U.S. economic outlook receded before the release of the important data of the jobs market. The pound fell against the dollar near an 8-month high versus the euro. Sentiment for the dollar improved recently as progress in the coronavirus vaccinations, moves by President Biden to pass fiscal stimulus, and improving economic data. The dollar's recovery was triggered by rebound in yields, and that's supporting the dollar against the euro. The dollar stood at 2015. We've gone lower, and the dollar was quoted at 513 yen. Data due on Friday is the forecast for the U.S. economic jobs added 50,000 in January. Since the start of the year, the big fiscal stimulus and Biden's Democratic government have supported sentiment. And the Bank of England is expected to change interest rates or quantitative easing on its meeting on Thursday. Is not, or I said not expected, but sterling will be closely watched. So not really a whole lot there. We're going to move into the analysis. So the euro on Wednesday took out the prior day's lows by a few pips, which was at 20.02, before rallying back to 20.30s. Support on Thursday will be 1966 with resistance at 20.52. So we're looking for 1966. And we actually came with that off of this. We have a wick there, I believe it was. See that right here, that wick? There you go, 1966. So 1966. I didn't think we were going to get there today. I thought it might be for tomorrow. But anyway, I guess we're getting there. We're making a good run there. And on the upside, 2052 would have been the risk. Onto cable. Cable gently paired back on Wednesday for a third straight losing day. Pull this back. Support on Thursday will be 35.56 with resistance at 36.87. So 35.56. 36.87. Onto the Aussie dollar. So the Aussie dollar traded motionless on Wednesday. No change. Resistance will be 76.60 with 75.70. So no change here. And the high so far this morning is 76.47. No change. Look at that. That was just motionless yesterday. Moving on to the Kiwi. Kiwi trading at 45 pip range on Wednesday. No changes. Resistance 72.39 with support at 71.51. No changes there. And you can see here, it did tag this upper area here, but our resistance is a little bit higher right there. Moving on to the dollar CAD. And FX was pretty quiet yesterday overall. No change. Support on Wednesday would be 27.42 with resistance at 28.29. So no changes here on dollar CAD. On to the peso. Dollar peso managed to stabilize itself at the lows at 20.05. The bias chart support we did have was 20.03. So it wasn't too far off. The pair is open to a little short covering. Support will remain 20.03, and resistance will be 20.27. And so far we've got to 20.26. Oh, not a bad call. On to the dollar yen. Dollar yen closed a bit higher in a tight range. Support for Thursday will be 476 with resistance at 451. So we held here and it stayed steady and we're kind of still hanging up in here. So it opened the door for us to move higher. Once again, I look just like the same way I did with holy smokes, was it forgot which pair it was, but anyway, I just went with the next. Where are they going to go and move to if they do move on? Oh, it was the dollar index. That's what I did with. So then I just went with this level here, and that comes in at 541 right there. So the low side, 476, because it's holding up in here, and we're still getting positive closes. So you're going to have any dips back, you're going to try to buy it back. So 476. Same thing, just went with some touches there. And on the upside, going with that range, you see right there, that's 541. So I just went with the levels. Nothing fancy. Going to the cash dollar index. The dollar index remains in a tight range on Wednesday, unable to close above 91.09. We got there, but we just couldn't fill the bill. Okay. But just like the dollar yen, you see, we rallied here, we didn't do anything. We rallied up here, we took out this area, but we couldn't close above it. Okay. Yesterday, see how we still closed a little bit higher, we couldn't take it out. It opens the door. Can they press the stops? So where would they go? So where's the next area we can go to? There you go. Right there. They'll put it 91.49, but 91.50 mocks Nix. Dollar index remained in a tight range on Wednesday, unable to close above 91.09. Short covering may allow a challenge of 91.49 as the pair, or the index, I should say, has not pulled back. Support will be 90.77. So that moves up a little bit higher. And 91.49. On to cross rates. QEN is still sticking around here. And we've got 75.96. And you can see the range was tight. So there's not going to be any changes here. We've just been kind of stuck here. We're not doing anything. So 75.96 on the upside. Downside, 75.12. No change. On to the euro pound. Finally, it's trying to make a stand. Not much of a stand, but we kept it at 88.03. I'm happy with keeping it at 88.03. And where do we put the resistance? Right there at that close. See there? Which would be 88.55. Oh, 57. 55. That's close enough. Keep it there. No change. On to the euro odd. Well, we dipped back. So it looks like we want to make this dip back in here. And this is what we need to defend. If we get a close below here, we're going to be heading lower. That close right there on that level is 56.95. Well, this one did slide back. Thought we could have been able to hold it. Obviously, the euro's weaker. And on the upside, it's right there. You can see right there. That close, that body close, 58.23. Euro Kiwi. This continued to move lower. Euro looks terrible. We had 66.69, and we're right there. Well, we're just going to see if it holds. There we go. And the low has been so far today, 66.60. We'll stick with the 66.69, see if we can make a stand there. And but might slide back as Kiwi continues to stay stronger, and Euro's already started to slide back. But we'll keep it for what it is right now, technically speaking. And on the upside, it's going to be the slower wick, 67.53. Aussie yen. On the upside, 80.75. That's going to remain. And you see, we actually gave it the benefit of the doubt up in the air. But it's still going to remain, although this market's real quiet. But if we can push higher, that's where the resistance will be, 80.75. Downside, we'll stick with the 79.45. We're just stuck in the range, really, at this point. Right here, and they're looking at which way they're going to break. If you were scalping it, it'd be against the 79.73, but that's crazy because it's just in a tight range. So it's not moving. So it's not even worse if someone was trying to scalp it. Going on to the guppy. Starting to pair back a little bit. We had the upside for 43.79. And at this point now, you can see they've had wicks, but we can't get past the body. And that body is going to come in right there at 43.48. Downside right there, the body touch right there, 42.09. If they break down there, And lastly, starting on, we have gone and making had a break here. You can see, let's just call it for right now. We're going to go with this 50-day moving average, and we'll go with that. There's a level here, and there's a couple of wicks here. And let's just go with this 50-day moving average. 77.89. And resistance now is going to be, you see this wick right there? We'll go with that for resistance. 78.67. There we go. Overall, you can see these markets, I mean, they've stayed quiet. I mean, look at Apple, which is not really doing anything. It's come off of these lows a bit, but not really anything of any significance. Amir says if we can take a look at platinum, yeah, we'll do that. So we talked about this, remember yesterday, and how we just gone right to that level, and the downside here for this market, we had broken passes. You see the wicks here? So at this point, you'd be looking at this body right there for them to hold that body. 1075. Need to hold that 1075 right there. We have to be careful though. There's some wicks here. So you might get a little bit of, you see these wicks here? That's going to provide some support there, which is right where we're at, 1085. So you may get a little bit of bounce from here, but ultimately they're going to test this 1075. So this is the real key. But you can see all this confluence of wicks here, right there. You see that? Here and here. Comes in right there, 10, right there. Comes in 1085 and a half. It looks like that's where we bottomed, at least intraday, short term. Pedro says, please take a look at gold. Yeah, okay, a moment. Well, we had talked about this. Remember back then, we were back here when we were talking about gold. And I said, hey, it needs to hold this 1816. They did. And I said, hey, they need to get above this 1838, which they did. And I said, the real key here is going to be this 59 or 60. And I said, and we got that close. Surprisingly, even though we got the close, because I said, look, in order to get things really juiced up for momentum, we got to get, it seems like a lot, but we'd already fallen quite a bit. Look how much we'd come off. You see? So initially it looked like a lot, but it really wasn't. I mean, in the sense of what it needed to do. In order to spark, we talked about this, spark a really good follow through, we had to get above 1902. But I said, for starters, we need this close here. And that was right there, 1868. I think at the time I called it 1869. We got that close, and then look, there was no follow through. We got this hanging man, okay? And we just went down, 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 down. Look where they held. Remember how I always talk about the bodies? Right there. Look at that body. It holds right to the tick on that body right there. So we make a move here, and you can see here the if you look at it from a technical standpoint, it doesn't look good. Like you come off of this, okay? So you should be, people are going to step in and defend this area right here. They'll come back to defend it. They do, and you're thinking, okay, well, we keep on. Okay, well, they're just testing it. Come back here and go, well, they're kind of holding here. So, all right, well, maybe we'll start to launch now. They do launch. They make a run up to 1880, and then look where we finish. That's terrible price action. So I think this was in the middle of all that, craziness with GameStop and everything. We just jump up. But we don't do anything with it. I mean, if we're going to jump up, we needed to take out that level, that 1869 again. And we don't. We close below it. And we sit there, and then look, then the follow through. And now look, we're back testing 1816. Now the market doesn't look good right now. You don't want to be shorting or anything because we've come into an area of support. Because if you're short, you'd be covered, and you'd say, like, let's say you were short from, let's say from right here, or you had shorted up in here. Yeah, you'd be covering a decent portion of your position here, unless you really thought it was going to break and say, let's see what happens. But right now, it doesn't look good. It looks like Eventually, we could come all the way back down here to 1750. I wouldn't be shorting it at this point. No, actually, it's right there, 1765. I wouldn't be shorting it at this point, but you can see where if you look at here on this, and like I said, I don't even use these. It's just I had to have these up, and they are helping some from just an overall outlook. This is from when I'm looking at stocks to get an idea of where things are going, and you can see the 20-day has crossed the 50. So that is adding a little bit more. Even if it can stabilize down here, it's going to stay weaker. But if we do break, the potential would be to 1765 if you're holding it for the medium term. But it's a little bit late to be trying to sell it right now, because you'd kind of probably all likely to be stuck holding it. And then we bounce back. Maybe we bounce back up to 1840, and we dilly-dally around there, and we dilly-dally some more, and then eventually we break lower. But so that takes care of that. But yesterday when I had the little mini rant, you can see here that you looking at the Fang Man, and I had mentioned in the chat room, I was having a feast just looking at Fang Man, and that would give me the hints on where NASDAQ was going to go intraday, and I'd have some good calls. And then we became detached from that as the rally broadened out, and Fang Man was doing its own thing, rallying more with the whatchamacall, the pandemic plays like Peloton right there, PayPal, you see right there, eBay, you see how these remain strong. But look at Apple, you see here. So then it was frustrating to be like, wait a minute, the NASDAQ's rallying, but these Fang Man aren't even rallying. And the crazy thing is that the Fang Man are the ones that hold the majority, hold the most, the key amount of volume. So you would have thought it had been more affected and hadn't had. Now we saw a jump from the other day with Amazon, but you see, other than the actual earnings, that we haven't seen that much of a look here. Now Microsoft has done well, but Microsoft is done well because they've had really good earnings. Their service is way up. Even the Xbox, you can't even get a hold of that thing. It's just been sold out. They sell out every. Now they were saying before, back in at Christmas time, you couldn't even get them. They'd sell out as fast as they came out, literally within seconds. So they were saying there won't even be enough Xboxes until April. Then they can catch up. Now, they just said earlier this week, they won't even be able to catch up until June to where things will be, an equilibrium with the amount of supply and the amount of buyers. So I'm not saying this all up on Xbox. I'm just saying is they have other services, and it's had turned in fabulous numbers. So that's why we've stayed strong here. But nonetheless, like I say, when you look across the board, it doesn't. That's what I was making the case yesterday, and I still make the case. These markets are just driving on momentum, intraday momentum, and they're trading very well on intraday momentum. And here's what I'm using. I'll go to that, and then we'll call it a day. It sounds crazy, but that's how it's trading right now. So you can see here how this thing is trading intraday momentum. Look at this. Look at these plays. It's just like, and these are good follow throughs. You see what I'm saying? So it's just trading, just going with these momentum runs here. Here's a 30-minute, here's a 5-minute, but you're seeing these good moves here, and that's all it's doing. It's just trading. So at this point now, I'm just going with the momentum because that's what the market's doing. And that's what I was trying to share, is that a lot of people I've seen that have been in the market for years have really had a tough time. Myself, I had a tough time too. And I was just able to say, I'm just going to go with the momentum. What it's doing is that's what it's doing. And yesterday, I just happened to I look at here, did 161% here, and I'll be doggone, that's exactly where the market went to when it broke. This actually was holding up okay. What broke here was, I had to be in front of the screens when it happened. I saw it happen, like, what the heck? And I heard the guy on the Squawk say something, but I had it on low volume. But it said, see, I'm not sure. Oh, here it is. The Hang Seng Index plunged 1.4% as tech stocks hit by the renewed blacklist concerns of Tencent, Xiaomi, Meituan, and Alibaba. So when I looked at the time, I looked here at the E-minis, and they didn't even move that much, but the NASDAQ was getting whacked here. And that's when you saw this precipitous fall. And then I just measured this out and said, well, that would be a target for them to go to. I'll be doggone. They went right there at 161%. They've seen a good bounce. but you can see the movements. It moves really well on this momentum. You see here. But anyway, that being said, someone else I think had a question. Well, we already took a look at gold. And Didier says to look at silver. Yeah, we can go take a look at silver. I don't even bother with it anymore now because someone said to please show the bias chart. Hang on. There's the bias chart. Euro is at now 1989 with a low of 1983. But anyway, yeah, because everything when they raise those margins, you knock more people out of the market. And I'm not one of those people that's going to hold. Although I thought, wow, this thing would probably slide. I didn't know it was going to slide that much. I was, I actually taken shorts up there, but like I said, it has been a while since I traded silver, and I go, this market. Once I started doing that, it was getting too fast. I'm like, no way. I'm going to get run over one way or the other. I'm not even used to trading that market. But let's go take a look at silver. Once they raise those margins, I'm like, there's no way. I mean, you're knocking so many people out of the box, other than someone that's holding for a longer term. Hang on. Yeah, see, I was even had it up on a 2-hour. At the time, remember, this was his key level, and 30.26 was a key weekly level. We showed that. Let's try and look at this on actually I have it on a weekly chart now. See, that one went right to the tick there. But let's see where it's at right now. I'll pull it up on the daily. Well, you can see right there, I'm looking at this key body right there. And that coincides with this level here. So that would be, well, that's where we'll find support there. You see that? 26.35. See that? So we'll go and get this. See that body there? There you go. See that? And that's key bar, because look, that really is a long-legged doji. You see? So we finished in the middle. I mean, that makes it a doji, long-legged doji. So the bulls don't have control. The bears don't have control. We finished right there in the middle. But that's a key level, and that level comes in right there, 26.39. And you can see if you went with this open right there, that'll put us right there, 26.33. Anyway, you can see the low was on this move 26.33 or 32. So that's an area of support. You can see that. See that right here. Here they hold their own. They come back. So you can see here they're trying to make a stand right there. So yeah, I would be definitely covering if you were in shorter. You could maybe buy some on a bounce. And Richard said about the bias chart. I'll pull it back up. I did put it there. He said he was looking about making a screenshot. I think he said thank you. He's done. He got it. Okay, great. Okay, well, I will post it in the chat room, but that'll be it for the day. Thanks for joining us here. We'll see you in the chat room later. Bye.